fancy seeing you here on the YouTubes. The cheap market has spoken. But first, oh yeah, snort those green candles, friends. Oh, it's been so long. Okay, look, everyone calm down. Just calm down for 5 seconds, okay? There is a comment by Fed's Bullard. If inflation falls dramatically this year, the policy rate recommendations may be reduced. This is establishment central bank scum talk for we're gonna cut the rates. We're gonna cut the rates. That's how they speak. They don't come and tell you, oh, we're gonna cut the rates, come in front run, everybody. This is how they say it. Now, I have a theory that they're also impacting the bond market and they got bigger players, but we'll go through that later. So if you've woken up today, which I hope you have, bless you, you'll see all this news. Just in, US Fed officials expect inflation to drop to 3.5% in 2023. When you hear this, don't even bother reading the news. I want you, firstly, just acknowledge we're friends. And secondly, please go to the trading view and just type in US 2-year, okay? You look at the US 2-year, USO2Y. This, USO2Y, the US 2-year government bond yield. Please open this up and that will tell you exactly what's going on. If this has gone down, oh yeah, that's exactly what's happening, right? Look at this, friends. Look at this. I want you to know. I made videos about this, but I'm going to keep talking to you right now. Screw this parliament. Look at this. The rate is 4.07%. You know what the interest rate is for America? I want to show you this quickly as well, okay? You can go to, if you go to Forex Factory, all right? If you go to Forex Factory and you click on calendar, you can go to the bottom left just quickly. You know, your rate here for USA is 4.5%. So something's up, right? How come, you want to tell me, how come the rate of interest is 4.5% up here? However, why is a poopy? It's a load of poop. How come the 2-year is saying 4%? What's going on? Well, it's a predictor, man. This is one of the macro secrets. The US Fed, they follow the US 2-year bond. I have a deeper theory. I believe that they first move this market and then they put the comments out. That's what I think. Because I think if you want to control world reserve currency, you got to do big games like that. You got to have your tentacles everywhere. So if you actually look, right, so I'm going to clean this up. If you look, you can see, obviously, there's a big discrepancy. Woohoo, this poopy's going nuts. All right, so you can see there's a big discrepancy between where the rates are today, 4.5%, and the market's saying 4%, man. So this is when you wake up every day, if you see comments, just open up and have a look, right? You can check the 4-hour. You go, okay, the rates have moved down, right? We've gone from 4.25% down to 4%. So you don't actually do this distance. You just check the right-hand side. You go, wow, we removed the cut. So we removed a full hike of 25 basis points. So you know there was something going on in those comments. We had no jobs data, no inflation data. There was nothing that came out that was specifically data, where it's a big main news event, right? So you know the commentary coming in reflects that. So this is the actual best way to interpret the data, right? You don't actually need to make up your mind, oh, they're going up or going down. Go look what the market thinks, man. These people have models and they actually look at everything put together and they go, all right, well, the yield curve and then the rates and the GDP and the unemployment and the imports and the exports, and just reflected in this U2S, this bond price here. So all you need to know is where rates are today and what's the 2-year rate saying. So what do we think is going to happen in the next 2 years with the rates? And they go, oh, this is going to go down. And yeah, this obviously is a moving target. You know, you can go back in history, right? So I'm going to leave the poopy emoji here. You can change it to a monthly, okay? Smell those green candles, friends. So obviously we are in extreme paper. We're in extreme pain here. Pain. You can see this thing starting to top out here. It's a rate going yeah, well, maybe expecting. See, this is the funny part. This is what you got to know, friends. The US Fed was saying their terminal rate is up here. That's what they're saying. They said, hey, by the time this is done, we are stopping at 5.25 to 5.5%. You are going to get murdered. That's what they're saying. And look, the 2-year bond doesn't even believe them. It's because the real money, the big money, who are planning for the future, because the US Fed, they're just a bunch of people with suits, okay? They don't actually operate businesses. They don't actually have to plan ahead. So yeah, they may be smart, but it's different to be smart versus if I give you workers, you got employees, you got to manage people and accounts, you've got to do imports, exports, think about geopolitical risk, you got to process all of this, all right? Those people who are in it, they will look at things differently because they have to make the right decision. So on average, they have better foresight for the next 1 or 2 years, which how they plan their money out. And that's what the market's saying. The market's saying, we don't believe you. We don't believe you at all. If you go back in time, I've actually made a video about showing that how the market's all rigged, right? So the US bonds will start moving down before they cut rates. It's like the market knows, man. Either the market knows, or they're cheating, or the Fed has insiders, or there's a puppet master, or someone's always got insider information. It doesn't actually matter. That's the best part. Yeah, just assume the market's rigged. Just assume the market's rigged and someone knows something. That's the best way to think of it. Okay? The best way to think about it. And right now, someone's willing to go down to 4% yield, right? Because that means the bond price is up. So think about this. A lot of these people saying, the Fed's not done hiking, darling. The Fed's got to keep hiking rates. Your portfolio's going to go down to zero, maybe negative. When they talk like that, look at this difference, man. Look at this difference. You're saying the rates are going to go up here. However, trillions of dollars of money, they're happy to be at 4% for the next 2 years. Think about that, man. And if you want to believe everyone holds hands and it's rainbows and fairies and we all hug each other, Greenpeace type of attitude, your interpretation of this is that the Fed, right? First, what they do is they shoot up expectations because they want CPI to come down. All right, so they shoot up the interest rate expectations, which is what they've done. And what they will say is they will anchor 5% in everyone's mind, 5.25%. They'll just say it because they're here to monitor expectations. And then what they'll do is they'll watch the 2-year. And if the 2-year starts struggling, then the Fed knows, even though I'm a big fat poopy head, I now know the market has just about finished the high inflation run part, right? They've done the CPI going out of control part. So this is a let's all hold hands and the world is perfect and we all smiles approach. And it doesn't really matter because there's an explanation for anything, right? You just gotta know what comes next. And really, obviously it's very, very hard to predict, but you gotta know, man. Like if you're on the sidelines and you're waiting for 5%, you got this big sign here telling you, it's saying to you, hey you right now, the rates are too high. And the Fed follows this. This is like as I mentioned, this is one of the biggest secrets in macro. The Fed is known to just follow the US 2-year rate. Okay? So, whenever you wake up, if you want to know, did news come out? What happened? Just look at the US 2-year, man. That's what I do. Look at the US 2-year, and you can interpret everything that comes out. So, when you see comments of them saying, up, down, inflation, up, down, I was talking about bluffing this whole time. This whole time I said the Fed is full of crap. The Fed is full of crap. The Fed is full of crap. I was saying the whole time. Why? Because everyone's talking about rates up here, and I'm like, dude, the 2 years, you're on your last legs, man. You're about to turn, okay? So, you want to check out Bitcoin, for example. Well, I want to know who is left to sell. These are weekly candles, right? So, at least we've gotten rid of the rates are going to keep going up part, because that's what we kind of think is going up next, right? Maybe that's what we've erased. The bear market ends when you run out of sellers. So, we got rid of, let's do this again. We had sellers from No More Bull Market, Russia, Ukraine, Celsius, Luna, UST, all of these. Elon Musk sold, so I've sold as well. You have all the FUD, BlockFi, Voyager, all these. You had FTX collapse here, And look at this little candle right here. This is, Genesis is bankrupt. Dude, brother, sister, what are you doing if you're selling here? You're late to the party, man. You're late to the party. Precisely 434 days late to the party, man. Like, come on. But, that's what happens. That's what happens. People have to sell and test, and that's how they screw it up. And then this is the classic, I've made a great mistake when I've sold parts. So that's what comes next. So The US 2-year, that's going to be our leader. And right now, it's saying rates going to 4%. So this is where now you can see the impact of those commentary. The impact of them saying, rates. But it doesn't matter, man. It doesn't matter what anyone says. What matters is what the US 2-year says. And the market pricing is 4%. So yeah, now the market has really liked their comments of like, rates can go down to 3.5%. And if you ask me, as a final message, I believe the Fed has so much forward-looking Fed data and models which they keep private. They don't release them publicly. So I believe they actually know that the rates are going to get clobbered in the next 3 to 6 months. But they don't want to tell us that. Because if they tell us that, FOMO-tards start buying up everything and it undoes all the tightening. So what they have to pretend is like we're waiting month to month. We'll go, we got to see what the data says. We have to see what the data says, darling. That's what they're prepping everyone for. They're prepping everyone like, hey, inflation's coming down. So if we cut rates, it's because inflation's coming down. They're trying to already groom everyone and manipulate everyone because they don't want everyone to say, oh my God, they're cutting rates. That means the economy's about to literally poop the bed. Let's sell everything. Okay, because then they have to do QE all over again and everything goes bad, right? They got to do the inflation run all over again until CBDCs come out. Until next time, friends, I love you all.